US employers added a far lower than expected 22,000 jobs in August.
It's the latest sign of a weakening labour market and keeps alive hopes for the Federal Reserve to cut interest rates later this month.
At the same time, unemployment has increased to 4.3%. Let's talk now to Matt Maley, the Chief Market Strategist at Maley Tabak and Company in Boston. Matt, welcome back. Good to see you. What does all this data mean for a rate cut this month?
Well, it definitely, Jamie, it definitely puts us firmly on the table. And the question now is whether it might be even not just 25 basis points, but a full half a point or 50 basis points. And, it's a very interesting situation because, the stock market here in the U.S. initially rallied quite nicely off this news. Now it's kind of rolled back over and it's moved back into negative territory, because people are starting to worry about lower interest rates, tend to be good for stocks. But, one of the things that everybody's been talking about for a while now, if interest rates go down for the wrong reasons, and that being a weaker economy, that could create some problems.
Jobs data can make for rather uncomfortable reading, as we know. Do you see any impact from the staff changes at the United States Statistics Office?
It's, a lot of people are starting to wonder, how good are these numbers? But you can see the most important thing is how does the market react to it? And they do. And the markets are reacting to them. They did last month as well. And I don't think that's going to have much of an impact on how we continue to react. The key is that people are worried that the economy is weakening, and with a market that's as expensive as it is, a weaker economy means weaker earnings, and that's not good for an expensive stock market.
So unemployment has increased to 4.3%. Is that increase in the unemployment rate a cause for concern?
Yes, it is, because one of the things, Jamie, that everybody's been talking about for the last year or so is that, as long as the consumer can hold in there, the economy is going to be fine, because, the consumer is 70% of the U.S. economy. But the one thing that was keeping the consumer resilient was the job market. If people start losing their jobs, not only that, and people see their neighbors losing their jobs, that gets them to spend less. And so that is definitely a concern about how strong growth will be as we move through the rest of this year and into next year.
There's always caution about talking about one set of figures, but let's do that anyway. What does all of this say about the wider U.S. economy?
Well, again, we've seen cracks in the economy in several different areas, especially in housing, with some of these housing prices starting to come down. So if we start to see a broad weakening in the labor market, that's going to filter over into many other different areas. So again, the linchpin behind keeping this economy strong or holding up well, even during the bear market of 2022, has been the employment level. If that starts to see bigger cracks, that creates problems.
Any link here on these figures to tariffs, or should we not make any connection?
Well, it's hard to make it's hard to know for sure. We're going to have to see more data. But the thing is, we've known for a long time that this would be the time of year where we would see the impact of these tariffs. And so to dismiss them, I think would be a mistake. So I guess my point is that, yes, it's definitely a concern. I think it is having an impact, but we're going to have to see more data in the months ahead.
Matt, have a good weekend. Good to talk to you. Matt Maley, Chief Market Strategist at Maley Tabak and Company in Boston.